Good morning, good afternoon, good day, and greetings to everybody. I wanted to make a combination of a very brief review or overview of what had happened last week and what to expect the week ahead. So let's start with the dollar index. As always, we've been, for the longest of time now, we've been pointing for higher prices on the dollar. For those that do remember, last week I pointed out the fact that we may be wanting to create a tail, and I pointed out the fact that we did have a tail, a very tiny tail at the time, but we may be wanting to make a deeper tail, a longer tail into this previous month's candle before an expansion to the upside, and preferably targeting this buy side liquidity and the consequent encroachment of this monthly CB from this candlestick's low to this candlestick's high. Measure the halfway point, you get this dotted line at 107.715. so that's my target ultimately for the dollar index. Moving on to the weekly chart, we have this buy side imbalance residing here in a form, this fair value gap residing in a form of a buy side imbalance from this candlestick's high to this candlestick's low. But I was mainly paying attention to this smaller one because of CPI and because there were equal lows within this area, which you see on a lower time frame. So I was really hoping to see if CPI could push us into this area before a push to the upside. And at the time, you should remember that this candle was the initiation for this one to turn was a deep red candle, a very bearish candle. And also, for those that do remember, I had this line here to be my invalidation point because I believe it was the last swing low, the last very visible swing low on a lower time frame. So remaining here on the weekly chart, my target still remains the same. Well, my final target, which is this swing high at 107.993. It's the last swing high that's inside of this inefficiency, and it's also around where the monthly sell side imbalance consequent encroachment is, like the halfway point. So when we do tag this level, when we do tag the 107.715, I'm definitely scaling off about 90% of my trades if I was a swing trader holding it from the bottom there, and then terminus would be at this swing high, this buy side liquidity. So at 107.993, that's where I'm looking to take us, where I'm looking to take the dollar to. The 9-day chart is just showing an immediate rebalance from this candle, a bit deeper, but essentially an immediate rebalance. 6-day tapped it. On the 6-day chart, we did tap into the buy side imbalance for this area, and now that we did not tag into the weekly buy side imbalance that I was wanting to see if we could reach to, I can at least just show the other time frames. So measuring from this candlestick's high to this candlestick's low, pull it out in time, we can see how we swept this sell side liquidity, because it's definitely a sell side liquidity on a lower time frame, dipped into this buy side imbalance and rejected aggressively to the upside. And I believe something similar on the 3-day chart, sweeping the equal lows before continuing to the upside. The invalidation point still remained the same throughout, because this is the third candle that created the fair value gap on a 6-day chart. Of course, now we can finally go to the daily chart. So on a daily chart, we had this level to be relatively equal with this level, this specific candle on the 10th of October 2023. At that point, we had not swept the low. So before CPI on Wednesday, we swept these equal lows. And then on Thursday, when it was finally CPI, I thought we were gonna go deeper and sweep it one more time. So it would be 3 sweeps before an expansion to the upside. But we did not go any deeper than that, reminding us where the buy side imbalance is. It's essentially at this area. So going back to the daily chart, we can see we did not tap into it. We just swept the relative equal lows and reversed immediately to the upside. So again, taking this off, the fact that we reversed here the way we did, for me, was personally enough, because we have swept liquidity more than once, because someone was waiting for this liquidity to be swept and put their stop loss here, and then they were purged again and again. So the fact that we swept it these 3 times, for me, was more than enough to say I think we are done and we are going to see higher prices on the dollar from here. Going to the 3-hour chart, well, let's start with the 6. We can see that now we have a massive imbalance after the rejection from these lows. A massive imbalance here that may need to be repriced too, for us to push higher from here. On a 4-hour chart, we have this inversion fair value gap from this candlestick's low to this candlestick's high, right? We can agree there's a fair value gap there in a form of a sell side imbalance, right? So as you can see, previously it was respected for lower prices, right, as a CB should. But now that we have broken above it and closed above it, I'm looking to see if it could act as an inversion fair value gap for higher prices. So that's a 4-hour inversion. So I'm looking to see if we could target for higher prices. The reason I also chose that area, that inversion fair value gap area, is because we also have an order block there that now becomes a breaker bar. Well, let's go back to the 4-hour chart. We can see this order block, right? This specific green candle. Look at how it was respected before. Price traded lower, closed below this low, and when the next candle opened, we pushed higher, then rejected from it. So for me, I could also consider this to be a breaker, this entire candle to be a breaker, a bullish breaker in this case. So I'm definitely looking to see if we can reject from this area to the upside. The last thing I would like to measure would be the consequent encroachment of this massive imbalance on a 4-hour chart. The consequent encroachment is there, the light blue line, but I don't believe that we are going to trade into that consequent encroachment if we are really bullish. And either way, for me personally, on the dollar index, my invalidation point is the swing low. So if and when we ever trade below this low, then I might reconsider my bias moving forward. But so far, I'm extremely bullish on the dollar, and I get the feeling we may not even trade into the consequent encroachment of this imbalance. But there is a likelihood of us trading into this area to push higher. Also because of the pound. So this is all I'm looking at on the dollar. On a 1-hour chart, we can see the relative equal lows. It was this low and these lows. So we quickly turtle swooped it, and then we closed below it, and yet again. So during CPI, I thought we were gonna go down one more time, but we didn't. We just stayed strong and pushed higher from there. So that's all I have on the dollar. Looking for a possible retracement into the range, and then a continuation to the upside. One last thing I wanted to do was to measure the range itself. So this is for Thursday's swing low to Friday's swing high. Measuring the range from the low to the high, we can see the halfway mark is exactly at this level, 106.161, which is also in the 4-hour inversion that I pointed out earlier. So I'm really looking to see if this area can act as the low of the week moving forward. So moving on to the pound, starting with the weekly chart instead of the monthly. On the weekly chart, last week we can see that we swept this internal buy side liquidity. Of course, on a lower time frame, these are internal buy side liquidity. Ignoring all these illustrations for now, because I just wanted to make a quick review of them before what I would like to see. So we swept these liquidities here. We tapped into this sell side imbalance, buy side inefficiency. So measuring from this candlestick's low to this area, measure that in time. We have the weekly, and that's the 50%, the blue line. So I kept this in mind going into the week ahead, and I don't know where my line is anymore, but I drew a line here saying that this would be my invalidation point. I didn't want us to trade into this higher smaller fair value gap residing there. So I put this here as my invalidation point, and also on a lower time frame, I believe there was also another one here at some point with a more tighter stop loss. So this was what I wanted to see going into the week ahead, and going into the previous week. So going into this week, of course, my target is now this sell side liquidity, this swing low here, and going through that, I'd look for these levels. I guess we could call them a mitigation block, these levels, which is 1.19398, and then of course going through that, I'd look for this sell side liquidity, which is my terminus on the pound. That's where I'd like to see us trade to. And staying here on the weekly chart, I've already highlighted this level as an inversion fair value gap, I believe, from the daily. I am not sure, but we will see. But while we're on the weekly, we can also see there's the weekly one, this wider area. Going into this week, the 3rd week of October, I would like to see us close below this BC, this fair value gap here in the form of a buy side imbalance. I'd like to see us close below it and probably use it as a support for lower prices. So going down to the 9-day chart, we traded into this. We traded into this imbalance and rejected immediately. This strong rejection shows me that we are probably gonna have very bearish candles coming up, at least 2 more bearish candles going into the next 2 9-day candles. 6-day, very similar structure, an imbalance, rejected from it and started trading lower. So I like the fact that we are creating a swing high essentially at this point, with 2 candles in between, 2 candles by the side of this main one that's rejecting lower. So I'm liking that, and I'd like to see a continuation of it. 3-day chart, same thing, imbalance, traded into it, rejected from it, and shooting for lower prices. And then finally now the daily chart. So the daily chart is where we get to see the exact sell side imbalance I wanted to take it from, which is in this area. But I also was cautious about taking it here because I wanted to see if CPI could sweep that sell side liquidity that we mentioned to go into the weekly buy-side imbalance. Of course, if you don't know what I'm talking about, you'd have to rewind the video, but I wanted to see if we could trade into that area. So I was cautious about trading this going into CPI. I wanted to first wait for CPI to tag us into that place for us to see higher prices, but we didn't tag in there, and that was okay with me. And now on a daily chart on the pound, first things first, we have the quarterly theory, right, from day. This here is our Q1, which we can see is measured as X, but whatever you want to call it, but this is our Q1. Our Q2, we are above the true opening price. Well, this was the true opening price, this candle, this 9th of October candle. Get the opening price of it and measure that out in time throughout the month. We can see that we traded above into a high time frame PDRA, which is this sell side imbalance here, then rejecting lower from it. So going into next week, well, going into the next 2 weeks, but ideally the next week, is that we could use this inversion fair value gap. Why am I talking about this inversion fair value gap? I even labeled it as I would like to see a closure below it by the end of the day. For those that don't know what this means, you should refer back to my live streams and recordings the past couple days, because I perfectly outlined these levels and what I would like to see them do next. So this was me saying that I would like to see us close below this BC by the end of the day, and we did on Thursday. So Friday opened, I wanted to see us trade into it. I would have been happy if we traded into it so that this week would be easier to work with, but we didn't trade into it, so I'm keeping an eye out on it. It's also a balanced price range because we now have a CB. We now have a CB that's formed with it. So going into next week, I would not like to see this inversion fair value gap fill up completely. I would like to see us trade into it, just pip into it, because I believe it's about the 50% of the CB as well. Well, it's actually above the 50%. So I'd like to see us trade into this 50% mark. I don't know if this makes sense, but measuring this candlestick's low to this candlestick's high, we have the consequent encroachment, which is this blue line, and this consequent encroachment is inside of this inversion fair value gap. So I'd like to see us just tap into the inversion and then reject aggressively to the downside. Well, that's the most ideal scenario. We may not get that, but that's what I'm looking for going into next week. Of course, my target being this sell side liquidity and the ones that I highlighted from a high time frame, like this one and the sell side down here. So let's see what we have in store for us next week. If we continue piercing lower without taking the sell side liquidity, if we continue piercing lower and it's already Tuesday or it's already Wednesday, and to us that's statistically the high of the week, then we may not have to trade back into this area. We may just use the lower time frame PDRAs to see lower prices. For example, this 4-hour inversion fair value gap. So I also in a live stream highlighted this inversion fair value gap. Why do I call it an inversion now? The fact that we previously respected it as the BC it was a buy side imbalance, a fair value gap that was supporting higher prices. We can see the bodies of these candles were inside of this perfectly and pushed higher from there. So now that it is now being disrespected, now that we've broken through it, we can see it act as an inversion. So it was traded into and now rejecting lower. I saw this, but I did not want to take it myself. I took it on euro, but not on pound. And we didn't even trade into the 50% of this 4-hour inversion. I mean, of this 4-hour CB that I would have liked. But if they don't trade into it next week, and if they don't bother trading into this area that I also pointed out, this inversion here that we pointed out, if they don't bother doing any of that, then this market is extremely bearish and we are definitely gunning for the lows. Of course, I also pointed out these relative equal lows, which I should set an alert for. So these are relative equal lows. This low, and this low. So that's the next target going into next week. Of course, on the 4-hour chart, we have already created a fair value gap that may be respected, maybe, at least for the session. Who knows, really, not sure, but we'll see how Sunday opens, especially considering the fact that we had a red folder event happen on Saturday for the pound. So who knows how the weekend is going to open. So let's just remove this and label it appropriately as our inversion fair value gap. So we will see as the week goes. I'm probably going to have a midweek update on all these currency pairs and instruments. Finally, we have the euro. The euro has already reached our high time frame objectives. We were targeting this sell side, we tagged it beautifully, and then this one we also tagged it beautifully. One thing that I was really highlighting last week, for those that remember, was the fact that this was the first CB that we created in a very long time on euro. I highlighted the fact that the last time we created a CB, a sell side imbalance, was in this area, which was about 10 weeks ago. So finally we created another one now, and I was paying very strong attention to this area. And of course, if you're using a weekly chart for your entry, your stop loss should technically be at this high. That's why this was labeled as my invalidation, which you can delete now. But your stop loss should be there, because that's the third candle that created the fair value gap. It was this one, then this one, then this one. These are the three that were involved in creating this fair value gap. So your stop loss remains here at the high of this previous one. Of course, on a lower time frame, that can be narrowed down even more, but that was what I was looking at. So we got that rejection there. The body of the candle couldn't even stay inside of the weekly sell side imbalance. We just rejected from it quickly and pierced lower. On the 9-day chart, it's clear, close to being an immediate rebalance to pierce lower. So on the 9-day chart, if you were looking for an imbalance entry, if you're looking for a rejection from this candlestick's low, your stop loss would have been here at this high, and that would have been valid. If you are not looking at this stop loss, then of course it will be the same as the weekly, because maybe you were looking at this other block residing inside of this fair value gap here as your entry. That would also be fine, but you wouldn't have gotten tagged in. The 6-day chart, we also have an imbalance here at roughly the same area as the weekly one. I did not label it now, but this is the 6-day one. 3-day chart, nothing really clear except for internal liquidity. And finally the daily chart. So we can see on the daily, it did not look too clear to me, because there wasn't really a visible imbalance besides this tiny one. But on a weekly chart, I could stay on it and it would make sense. It could make sense to me. So I can remove, let me remove this rectangle. So we can see here on the daily chart, after taking out internal buy side liquidity, we got a sharp displacement to the downside, and also created a fair value gap here in the form of a sell side imbalance from this candlestick's low to this candlestick's high. I'm not deleting these yet because I wanted to show what I was looking at on a lower time frame. Of course, on euro, I'm very cautious about it, but this swing low is my first target, and the monthly sell side imbalance, buy side imbalance that I've been looking at here is the last target. So daily chart, first target, swing low, second target, this purple area. So that's all I'm looking at. And going into next week, I'm looking to see how we react from this shaded area, which is the sell side imbalance. the CB. So let's go down to the 9-hour chart. We also have a CB inside of there. 6 hours, same thing. All the time frame I believe should have this same imbalance here. And at this point, when we got this sharp displacement and closed below it, I called this to be a market structure break. I believe in one of the live streams where we have a swing low that we closed below. I qualified this as a market structure break. So I believe it was on Friday we got a retracement back into the range. We got something like so, and we reacted from this sell side imbalance, which this is basically the BC that I highlighted on pound. Let's see if it respected this side. We tapped on it immediately and rejected from it. So I don't think this is the high of the after the drop. I don't believe this is all there is, because when we also measure from let's go down to the 1-hour chart. On the 1-hour chart, I had this internal buy side liquidity highlighted. I had these highs highlighted, and also we'll see these highs on a lower time frame on the 15 minutes chart. But above these highs, we have this fair value gap, right? We have this CB residing here, and we can already see on the right side that I had this setup ready to be activated, ready to be triggered, because I wanted to see us trade into this inefficiency before falling off, and this high was my stop loss, my invalidation point, because I did not want to see us trade into this higher imbalance. I wanted to see this fair value gap left open as a breakaway gap. If we can see where that level is, it's inside. It's actually 100% fill of this daily imbalance, so I don't want to see 100% fill on it. Let's go down to the 15 minutes. As I mentioned earlier, we'll see the internal liquidity that I was pointing out. So we have these highs here that are a bit too clean for me, and inside of it we have the 1-hour imbalance. So I don't know with certainty, but I don't believe that the high after the drop has been established at that reversal that we had from a 4-hour chart. If it has, that's also okay, because we know where we are targeting and we know how to react accordingly. So I also measured this swing low to the run up. If this fib tool can just work, yeah, I measured this swing low to the run up there, and we can see the 50% is over there. Anything above the 50% is a premium, anything below is a discount, and any PD arrays found at the 50% is a high probability entry. So I saw the fact that we have this one, well, I'm usually trading on a 1 hour, the fact that we have this CB, but we also have this internal buy side liquidity. So I wanted to see if we could trade into here to give us a deeper premium price before falling off. Of course, price is so low because we tagged into the 25% quadrant. We tagged into the last quadrant of this range, from low to high or high to low. So we may not even tag into this area anymore. We may just see a displacement using this fair value gap to the downside and purchase sell side liquidity. Same with the dollar. If it shows us support, if it shows us PDRA supporting higher prices, then we may never have to trade back down into these areas. Well, up in these in euro, but down in pound. I mean in gold. Dollar index. I'm all over the place with my words now. I also saw this entry before CPI, but I was careful about it. This was a textbook entry for me because we swept the previous day high, we We got a sharp displacement, created a fair value gap with an order block, and I saw this perfect entry. I even saw this retracement for a second entry, and finally here again tagged it in one last time before CPI, but I did not take the trade because I was cautious about the possibility of us sweeping buy side one more time, as I've already mentioned. And yeah, we got the displacement down that I did not participate in. So finally, now moving to the indices. Let's begin with the E-mini S&P 500 on a weekly chart. This is the continuous contract, by the way, so we get to see the full data. This was a very easy trade to take, and everything made sense. And even with the weekly updates and everything was so precise. It was essentially a trade of a week. We can see here that we have this order block that I pointed out. I dragged it out in time. Inside of this imbalance, I told myself this was one of the easiest entries I could ever get. It wasn't even this clear for me on the NASDAQ. Of course, I also pointed out the fact that we're targeting these sell-side liquidities and this internal one. So this rejection here made me very happy that, okay, we finally rejecting the order block, we're rejecting the sell-side imbalance, and that was the week of CPI. So moving forward into the coming weeks, I believe that we'll see bearish prices on the indices. So here I also measured I also saw an SMT divergence, which I pointed out in my live streams and the previous videos on this channel, which I'll also probably show now. But we have here a CB that I also said I would prefer to see this left open. So yeah, we did not tag into it. We had an SMT divergence between this price and this price, and we had this order block. So this was a perfect entry for those looking to sell the E-mini S&P 500. I just did not expect us to trade this high into when opening up on Friday. I didn't expect us to trade back up this high up into the range. I expected this order block to hold. I expected us to trade back into maybe here, then continue lower, but of course the market makers will do what they have to do. This day, when we're trading lower, I also said on one of my videos that I would have liked to see us close below this fair value gap, because that makes trading Friday easier. That makes me almost confident that we might get the high of day inside of this inversion fair value gap, but we didn't get that. But on Friday, finally, we got a closure below the fair value gap, this BC. So now I can qualify it officially as an inversion. So I'm paying attention to it going into the week ahead. So I'd like to see us use this as resistance for lower prices, especially on the ES, and especially considering that we are still in a premium according to the true opening for the month. So going down to the 3-hour chart, well, again, let's start with the 4 hours because that's traditional for most people. 4-hour chart, I can actually dial down my invalidation points to Friday's high. I don't want to see us take out Friday's high for any reason, because now this range went from this low to this high to this low to this high, displaced lower, came back to the middle of this previous range from CPI range, high to low. We have us trading above the 50%, touching the golden zone for a retracement and to the downside. So now I don't want to see us come back here because there's no reason for us to return to this level. I actually want to see us open up and trade lower going into Monday, and then Tuesday probably I expect something like this. So this is the high on Monday or Sunday, and then I expect us to trade like so on Monday, and then somewhere on Tuesday to create the high of the week by purging Monday's high inside of this inversion fair value gap for its final displacement to the downside, continuing to Friday. Of course, my short-term target are these sell side liquidities, and then the ones that I highlighted on a high time frame, like these two. So that's what I'm looking for on E-mini S&P 500 going into next week. I'm still extremely bearish for as long as the dollar is bullish. I should point out that I was looking to see last week if we could close below the new week opening gap, which is this area, this highlighted area from here to here. But we tagged the top of the new week opening gap, but not the bottom of it, which was fine. It was a target, an easy target for those looking for lower hanging fruits. So going into next week, again, I'd like to see us trade below it, possibly use it as a resistance for lower prices. Let's check what the daily inversion fair value gap looks like on the December contract. Again, ignore all this. I'm going to raise it going into next week, but I just wanted to leave it to show what last week was like. So yeah, so the inversion is over there. If we can trade lower, we might use this new week opening gap, well, the previous week opening gap in this case, as our resistance for lower prices, or we could use this daily inversion or the fair value gap for lower prices. We'll see what they have for us. So now finally going to the NASDAQ. Let's start off with the continuous contract. On the weekly chart, we can clearly see the SMT divergence. Yes, here we respected the CB. Yes, we did not close above this CB. We did not close above this CB from this high to this low. We did not close above it, and we did not tag the first candle that created the CB in the first place. But we can clearly see the SMT divergence, especially when we split this into two, getting the continuous contract for E-mini S&P 500 on a weekly chart. We can see how we failed to take out that high, that previous high, but on the NASDAQ we did take out that high. But here we failed very heavily to take out the high, which is why I am currently looking to see if we'll see deeper push down on ES as compared to NASDAQ. But going back to the NASDAQ, as we were pointing out already, daily chart, I was not focusing on the NASDAQ as I've already been showing many times. I said I'm still sticking to the E-mini S&P 500 because we are weaker there as compared to the NASDAQ. But this week will be different. This week I will be paying equal attention to both of them, especially considering that the NASDAQ is basically the weaker sister now. We have all this inefficiency that we still need to tag, that we have already tagged on ES. We've already tagged, we actually go into these lows now. But when you look at the NASDAQ, the lows are still down there. So NASDAQ to me is the sixth sister, and I believe we'll aggressively trade below to catch up to E-mini S&P 500. So while we're here on the daily chart, we have closed, I'm highlighting the fact that we've closed below two inefficiencies. We have this higher one that we rejected from briefly, and we have this lower one that's smaller, and we can already see that we've traded into the new week opening gap. It might not be visible here, but if we bring up the December contract and go down to the 3-hour chart, we can see we've traded into this new week opening gap. We actually passed the consequent encroachment and the 25% of it, about to trade to the low. So Thursday and Friday were really bearish on the NASDAQ, but let's continue. Let's not get ahead of ourselves here. Let's go down to the 4-hour chart. On the 4-hour chart, we have this fair value gap in the form of a CB residing in this area on a 4-hour chart. And I believe the high of the week will be created inside of this area on the 4-hour chart. I don't want to leave that on my chart because I see that the CB, the 4-hour CB, is basically around where the inversion fair value gaps are. It's in between the both of the daily inversion fair value gaps. So I would like to see the high of the week created somewhere inside of here, and we might actually tag to the higher one because of this other block. So after clearing all these liquidities, we might tag into this inefficiency on the 1 hour. I would look at this first, even though it's not what it should be. I would look at this first candle, pull it out, and qualify that as an order block or as a breaker. I'm not sure. It's supposed to actually be the whole leg, because we have a high, a low, a higher high, and then a lower low. So technically this whole leg of the move is the breaker, but I'm just gonna pick this guy because it's the one inside of the inversion on the daily. Or we can just look at the daily strictly and call that the high of the week. So that's what I'm looking to see going into next week, used as resistance for lower prices. My invalidation point in this case would be this swing high. Again, just like ES, the swing high would be my invalidation point, because when we measure this inefficiency from this low to this high, the perfection on how we reverse from the 50% after taking out Asia high and London high is too perfect for me to ignore. So I'm looking to see if this high will be maintained while we reject from this area to the downside going into next week. Of course, the targets that I have in mind are the relative equal lows on the 4-hour, these lows, and going into that we have this entire inefficiency that I wanted to fully fill up as the 6 sister. So that's all I'm looking for on the NASDAQ and ES. On YM, we got a massive retracement, almost taking out CPI's high, which I thought it was going to do. I thought it was going to take out Thursday's high, but we didn't, and now we're rejecting aggressively, going downwards. We did tag into the new week opening gap first, so it was extremely bearish first before the other two sisters. YM is just really messy for me to actually see any very easy entry. If we are expecting a retracement on the other two, I don't see where we could retrace on the YM unless we use inversions. That's the only thing that makes any sense to me. But right now, I'm expecting lower prices, but I can't see anywhere that I would consider to be an entry. My invalidation point would have to be Thursday's high, so that's not really the best risk reward for me, and we're still way up there. Sell side is all the way down here, so I'm probably not gonna touch YM as much unless we see a possible push lower. Then maybe use this new week opening gap as a resistance for lower prices. That's the only thing I could consider on the Dow. So yeah, that's all I have. That's all I'm paying attention to. Anything else I'll probably update in the middle of the week. For now, take care, good luck, and good trading.